Hello and assalamu alaikum everyone. A very warm welcome to the Advanced Audit and Assurance December 23 webinar to success, and I am Kashif Kamran. Today is the day 3 of the ongoing webinar. Let's see what is the agenda. The day 3 agenda is to look at the reinforcement for exam changes in AAA paper since December 22. And this is in continuation of the day 2. On the day 2, I identified the changes which have come into the AAA paper since September 2022 exams. And on the day 3 today, I will be exploring each of that change in more specific depth, so you have a clear understanding of each change. The changes in terms of the marking scheme and the professional marks will be covered on the day 4 and day 5. So let's resume the day 3 from the same point where we left the day 2. So day 3 of the webinar to success for December 23. Changes in AAA since September 22 exam. This is the session 2. You should watch the session 2 after you have watched the session number 1, so it makes a connectivity. Now, the very first thing we discussed on day 2, the first change was the materiality determination in question number 1. In line with the partner email. Now, since September 22 exam, when you open up the question number 1 and you read the partner email, the partner will be telling you on which factor you should determine the materiality, and then you will determine the materiality on that particular factor. It could be revenue, it could be profit before tax, or it could be total assets. You need to read the partner email very well. Now, when we were reading the question December 22 on the day 2, we found that the partner was telling us in the December 22 paper that you need to set the materiality on the basis of the profit before tax. So we'll see how you do that and how many marks you fetch for that. So let's go back to the practice platform and let's explore the statement of the partner, and let's see how you need to work on that to score the desired number of marks and the examiner expectations around it. So just let me open the practice platform. I hope you can see that in front of your screen now. We opened the partner email from the December 22 paper. And in the partner email, we got the statement of the partner. In the hello paragraph, the partner said, based on the analysis I have done of the industry, it is appropriate for the overall materiality to be based on the company's profit before tax. So he wants us to base the materiality on the profit before tax. So we need to determine the materiality in accordance with the partner expectation. Now, how would you do that? Where would you put that paragraph on materiality in the briefing note? How would you structure the briefing note? And the primary focus is on materiality. How many marks will you fetch for determination of materiality since September 22 exams? Now, we saw yesterday that this briefing note has an A requirement, which is about business risk. The B is about the risk of material misstatement. C is about something about outsourcing, and D is about the procedures. So that's how the briefing note is to be set up. You can see this starter of the email. It's to the manager. It's from Ted Hastings, the engagement partner. The subject is audit planning, and the date is 1st of July. Now, how would you set things up? First of all, you will immediately open up the briefing note from the response option right here, and you enlarge this up and bring it to the left side with your partner email on the left side. And then on the briefing note, you will write the heading briefing note. Even if you're not writing that, that's perfectly fine, because the briefing note is already given in the header of this document you've just opened. But still, you can give briefing note as a heading, and then you go down and you say to from date subject. So you just copy this from here, to from date subject. Control C, you bring it back to your word processor right here. So to, from, subject, and date. Everything will remain the same because you're replying back to the email of the partner. Now, yes, the to will become the from, and the from will become the to, because you are now responding back to the partner. So we'll copy the from, Ted Hastings, and we put this here in Audit Manager. So to becomes the partner, from becomes the audit manager. So that is just the swiping of to and from. Rest all remains the same. Then in the briefing note, you need to start the briefing note with an introduction. The introduction is basically the purpose why you are writing this briefing note. You're writing this briefing note for A, B, C, D. A is the business risk, B is the risk of material misstatement, C is the impact of outsourcing on audit planning, and D is the procedures on holiday pay. So that's the four things you're writing this briefing note for. Now, after the purpose of briefing note, which I've even guided in my previous webinars as well, how to write that down. So I'm not putting that down in this current webinar. So you write the introduction. After introduction, you have the logical flow, A, B, C, D. So you start with A. A is the business risk. You don't need to put the materiality paragraph anywhere so far because business risk has no interaction with materiality. In business risk, you don't need to comment on the materiality, so you're not bothered about that. Then you get to the B part. B part is about the risk of material misstatement, or the B part could be an audit risk in any exam paper. So if a requirement is on audit risk or if the requirement is on ROM, then you have to put the materiality paragraph above it. So the B requirement is about risk of material misstatement. So right before the B requirement, you will put a heading materiality, right, like this. So it's in between the A and B requirement. So you finish off business risk. Where you finish off the answer for business risk, you will put another heading, materiality. You will then determine the materiality, and then you will start the answer for risk of material misstatement, which is B. And then in the same order, you will go down, wrapping up the answer for risk of material misstatement. You come to C. C will be the impact of planning on outsourcing. And the D will be the audit procedures. D will be the audit procedure. So that is how you structure the briefing note. Again, the materiality paragraph will come above the requirement of audit risk and risk of material misstatement. If in an exam paper, you don't have a business risk, you only have an audit risk question, or you only have a ROM question, then you put the introduction. After the introduction, you put the materiality paragraph as a heading, and then you start with the answer for audit risk or ROM. But if in an exam paper you have a business risk and audit risk together, or business risk and ROM together, you will first solve the business risk. Where you end the business risk, you will put the heading materiality, you will calculate and comment on the materiality, and then you start writing the risk answer, because for the risk of material misstatement answer, you need the materiality to be calculated, because that will be helpful to judge whether a risk is material or not. Okay, so this is the structure, right? Now, what to do with materiality? The partner is telling us to base the materiality on profit before tax. How many marks will you get for this paragraph, and what you should be demonstrating? Now, the first thing is, when you are writing a materiality paragraph and you know that it is to be based on profit before tax, you will first calculate the materiality on the range of profit before tax. You know, the range of profit before tax is 5 to 10%. So you will determine it at 5% being the lowest side and 10% being the highest side. And then you will choose which percentage you would like to go with. Either you want to go with 5 or 6 or 7 or 8 or 9 or 10, whatever, and you decide. Let's see what to be done here. The materiality is to be based on profit before tax as recommended by the engagement partner. The range of materiality on profit before tax is from 5 to 10%. And you all know that range, right? You should be familiar with what is the range of total asset, or what is the range of revenue, or what is the range of profit. So the range of materiality on profit is from 5 to 10%. Then you show examiner that what is the materiality at 5% and what is at 10%. You calculate that, and then you exercise your judgment that which percentage will you choose and why. So examiner will reward you for that. How many marks will you get? Just wait for it. So first you do the calculation at 5 and 10%. Now, what is the profit before tax? Let's check that out. We have the selected financial information. You open the selected financial information exhibit number 3, and you go down and you find the profit before tax 60 for the current year of which we are the auditor, that is 20x5. So it is $60 million, which is the profit before tax. So we need to calculate materiality at a profit of $60 million. So we put a full stop and say, at 5% of the profit before tax, the materiality will be $3 million. Or you can first say profit before tax for what's the name of the company? Mercurio Company. The profit before tax for Mercurio Company is $60 million. So at 5% of the profit before tax, the materiality will be $3 million. And at 10% of the profit before tax, the materiality would be 10% of $6 million, $6 million. Full stop. So you have calculated the materiality at the range of the profit from 5 being the lowest to 10 being the highest. So the lowest materiality could be 3. So you need to, if you want to set the lowest materiality, then you will be setting 3. If you want to set the highest, you will set 6. If you want to set something in between like 4, 5, 3.5, 4, then that is your determination. That is also possible. Now, let's read the first paragraph here. Is it the first year audit? It says it is the July 1st. You are a manager responsible for the audit of Mercurio Company. A Mercurio Company is a listed company, so that's very important. It's a listed company for the year ending 30th of September. Mercurio is one of the leading specialist retailer and is operating 264 stores. So nowhere it is written that it is the first year audit. Let's check the partner email. With the year end approaching, I need you to start the planning of Mercurio. I met the finance director to discuss this, and this. This is and so even the partner is not telling us this is the first year audit. So that means this is a recurring audit. So if the question is silent, it is a recurring audit. So if it is a recurring audit, so my justification is, because examiner will reward you for your justification. So if it is a recurring audit, you should not keep the materiality at the lowest 3 million, because with every year, your materiality threshold will rise gradually because you will be more confident as an auditor. You keep materiality level lower in the first year audit because you have less knowledge of business or your detection risk is very high in the first year audit. But if it is a recurring audit, then it's very fine to keep something in excess of $3 million and less than $6 million. So it should be something in between 5 to 10%. So I'll write over here, Mercurio is our existing client. How I got to know this is an existing client, because nowhere it was written it was a new client. So that is very valid. If a question is silent, then the client is existing. Mercurio is our existing client, though it is a listed company. The materiality for the upcoming audit should be based at $3.6 million, which is 6% of the profit before tax. So I'm not taking the lowest one, 5, because it's not my new client. It is my recurring client. So I'm gradually increasing it to 6% of the profit. So 6% of $60 million, it is $3.6 million, which is 6% of the profit before tax. The materiality threshold is also Mercurio is our existing client. So though it is a listed, Mercurio is a listed client and a listed company, and a listed company. That would be more senseful. Mercurio is a listed client and it is a listed company. Therefore, the materiality for the upcoming audit should be based at $3.6 million, which is 6% of the profit before tax. So what is my justification for keeping it at 3.6? Number one, my justification, it's an existing client. And number two justification is that it's a listed company. So if it is a listed company, I cannot just increase my materiality very high immediately, as in like I keep it like $5 million or $5.5 million. I just should increase it gradually. And yes, when you read the case, you will also come to know that there are a couple of risks which the company is facing. So also to consider the risk which are mentioned in lots of exhibits, I cannot just increase the materiality level very significantly. So being an existing client and being a listed company, I would base my materiality at 6% of the profit, which is 3.6 million. Moreover, the materiality has been kept at $3.6 million in order to address the risk of material misstatements mentioned in order to address the risk of material misstatements specifically highlighted by the partner in the meeting with the finance director. So you should keep it at $3.6 million also to address the new risk which has arisen for this year audit. So it should be kept at $3 million, $6 million, $3.6 million in order to address the risk of material misstatement specifically highlighted by the partner in the meeting with the finance director for the current year. For the current year audit. So that's my justification. So examiner is looking for calculating the range and then choosing which of the range will you follow, the lowest or the highest, or something in the middle. You can choose the lowest if it is a first year audit, for example. You can choose something in the middle if it is a recurring audit, but you cannot just increase it very significantly because there will be some new risk when you start reading the case study and you start reading the exhibit 1, 2, 3, 4. You will come across different risk of material misstatement which the client is facing. So because they're facing a lot of risk and the partner has already highlighted them and you will be addressing them in the B requirement, it's ideal to increase the materiality gradually. So some justification. There is no one good definition of a justification and it should not exactly match the examiner justification to be rewarded. And I'll just make you that clear. Now, this paragraph here, which you wrote, this is just an example paragraph. You can modify the paragraph according to the perspective you got today. This paragraph is worth 3 marks. And these are 3 technical marks. These are not professional marks. And where these 3 technical marks are being deducted from, let me show you that. You open up the partner email, and the partner said that you need to evaluate and prioritize the significant risk of material misstatement. So that is the B requirement. And in the B requirement, you have how many marks? For the B requirement, you have 18 marks. So out of the 18 marks here, 3 marks will be deducted for determining the materiality, because this materiality will be helpful when you comment on the significant risk of material misstatement. So you have 18 marks for ROM. You will take away 3 marks from here, which is for the paragraph on materiality you have put in. So when you come to write the risk of material misstatement answer, you already have 18 minus 3 is equal to 15 marks. And you now need to write an answer for ROM, which is up to 15 marks. And I will be telling you the marking scheme on the day 4. The marking scheme for each audit risk and each risk of material misstatement now is 3 marks. So if you divide 15 by 3 marks per risk, so ideally you're writing 5 risk of material misstatement and wrapping up your answer, because 3 marks has already been taken for materiality. So that is the 3 technical marks gone above. So that's how things have changed since September 22 exam. Now let's see the examiner criticism around the materiality paragraph, and let's see from the wordings of the examiner, are we getting 3 technical marks for materiality? I will be opening up the December 22 examiner report for you. I've taken extracts of the December 22 examiner report on my Word file. This is the day 3 Word file, and we are looking into the session number 2 of the changes being in the AAA paper. And this is the December 22 examiner report, the paper we are doing. And this is the examiner comment on materiality. Let's see what the examiner is telling us about materiality and be very careful. Candidates are expected to initially determine a materiality threshold for the audit as would be used in practice. So you need to determine the materiality threshold as you do in a normal practice. 3 technical marks. See, examiner is telling us 3 technical marks are available for materiality determination. But how would you get these 3 marks? Candidates are expected to demonstrate a knowledge of the appropriate percentage range for the benchmark instructed by the partner. In this question, profit before tax was to be utilized with the candidates expected to use a 5 to 10% range. So examiner is saying the student should know the range for the threshold, like revenue, like total asset, but in this case, it was profit before tax. Calculate the monetary amount in respect of the range. So first thing the student has to do is to calculate the monetary amount in respect of the range, 5% and 10%. $3 million, $6 million. So that's the first step you need to do. Full stop. Candidates must then use professional judgment. So you then need to use the professional judgment to select the appropriate materiality threshold. Which threshold will you select? 5, 6, 7, 8, 9, 10. So you need to use your judgment, and that is what the examiner is looking for to determine the appropriate materiality threshold. I choose 6%, right? Given the risk level which exists in the audit. So I talked about that there are a couple of risks which the partner has communicated to me from the meeting with the finance director. So risk levels, and it was a listed company within the audit, and provide a brief justification of their choice. You need to justify why you choose 6%. So I justified my 6% because it was a recurring audit. I justified it's a listed company, and I justified that there are a couple of new risks which has been identified from the meeting with the partner and the finance director. Each of the steps will give you marks. So each of the steps. So first, you calculate the range from 5 and 10%. Then you pick up your justification that should it be 5, should it be 6, should it be 7, should it be 8? Then you say why 5 or why 6? You justify, you give the basis of your choice. An examiner will be happy rewarding you 3 good marks. So please be very sure this is what I exactly demonstrated for you. The examining team will give credit for any reasonable explanation of the chosen materiality threshold. So examining team will reward you for any reasonable explanation. So there is no specific explanation which they are looking for. They're saying any reasonable explanation. You can give any explanation for 6% or 5% or 7%, but you have to give an explanation. But the examining team is saying any reasonable one and will give you marks. As the marks is to recognize that there is an application of judgment. So why are you getting marks? You're getting marks for the recognition that you applied the professional judgment. So if you applied the professional judgment as I did, 6%, and why? So I choose 6%. It was my judgment, and I justified my 6%. So that is what the examining team is looking for. And the candidate can justify their response, and you can justify why there is 6%. The most important line, it is not required that that candidates select the identical percentage or figure that that they provide a justification identical to that shown in the model answer. This is the best line, because a lot of times students are confused with it. It should not be the case that your percentage is identical to that of an examiner, then you will get 3 marks. Or your justification is identical to that of an examiner and you get 3 marks. Look at the sentence in red. Even though your percentage is different from the examiner, your justification is different from your examiner, the examining team is saying any reasonable explanation for 6%, which I've chosen, and you get 3 marks. So examining team is not looking for your answer should match with examiner answer, but examining team is only looking for your application of judgment to reward you 3 marks. So this is the first change, right? Which you should fetch in the AAA paper and fetch 3 good marks. And where to place materiality, I've already made that very clear. how to position that in the briefing note, and how to write it. Now, if you can just follow that and make your own paragraphing for materiality, and you would be so good fetching these 3 easy technical marks from your December 23 exams coming up. So this is the examiner comment from December 22 examiner report. The problem is students don't read examiner reports. They just run after answers. And examiner reports are so productive that examiner is saying, even your answer is not identical to my answer, I'll reward you, because I'm not looking for the answer should reconcile with me. I'm only looking for your justifications to reward you. And this is for the 100% AAA paper. Your answer should not reconcile with examiner answer to be rewarded. Examiner is looking for your understanding, your judgment, your basis, and your explanations to reward you. Okay, so that's the first thing, right? We have done in today. Materiality determination in question 1 in line with partner email. So you should know the thresholds, revenue, total assets, and profit. See what the partner is telling you in the email. You should know the percentage, 0.5 to 1% of revenue, 1 to 2% of the total assets, and 5 to 10% of the profit. And you then should calculate the materiality on the range and then choose which one to follow and why. And you go down. First year audit, likely you choose the lowest one, because in the first year audit, you have less knowledge of business and the risk profile is very high. So that's the first change discussed. Now, the second change, which has been brought since September 22 exam, is the introduction of the terminology significant in a question on business risk. If you see the prior business risk questions, they used to ask you evaluate the business risk. Now, since September 22, examiner is saying evaluate significant business risk. Now, you all know how to answer business risk. That is not changing. And I'm not discussing that at all because these are webinars, right? What I'm discussing is this. What are examiner expectations with significant? What you should demonstrate in your answer when you are writing a business risk to justify this. What extra you need to do, honestly, or you should not do something extra, or you just simply write a business risk answer the way you were writing before. You are not prioritizing the business risks, right? This is not any need. Business risks shouldn't be prioritized. But yes, the examiner is saying evaluate the significant business risk. Just let me show you an example for that. And we'll read the examiner report for it. You go back to your briefing note on the exam portal, and we were looking at the materiality paragraph, something like this. And I given you the marking scheme that 3 marks is for materiality and the rest would be for ROM, 18 minus 3. Okay, business risk. If you open up the partner email, it says evaluate the significant business risk. So we need to evaluate the significant business risk. So we'll go back here and we see the business risk. Now, how many marks we had, sorry, for business risk? We had 8 marks, and each business risk is worth 2 marks as per the new marking scheme. 8 marks divided by 2 per business risk. So that is equal to 4 business risk we are writing in the whole answer. Choose the 4 best one you are good at writing, and choose the 4 best one where you can give a very good impact on the business. Remember, it's a listed company, which is critical, right? A listed company has shareholders, and shareholders have a very keen interest in the profitability. So any business risk which is impacting your profit or declining your profit or reducing your profit or market share or affecting your reputation will be a significant business risk, right? You know, there are lots of business objectives. And a business risk is the one which hurts your business objective, affects your business objective. So being a listed company, for the shareholder, the profit is very significant. So anything in the scenario which you believe will have an effect on the profit going down or the profit margins going down or the future profit will be affected or the future market shares will be affected, because business risk is not just in the present. There could be something which affects the future. So if future sales will be affected or future profits will be affected, more income statement related risk will be more significant ones for the shareholders. More income statement risk, anything impacting sales, market share, reputation, profitability will be more significant ones. So you can choose the ones where the impact is going on profitability, sales, market share, reputation as the better one. Working capital management, liquidity, yes, they are also very important risks. But you can, if you can find the ones which are hitting revenue, profit, reputation, would be better one when you're addressing the significant risk. So choose the 4 best one to write in. If any business risk you're writing can be linked with financial statement numbers, as in you're telling, as if you can link something with the sales number given in the exhibit number 3, or you can link something with operating profit. You can justify the increase or decrease and link that with the business risk, or at least when you're writing the explanation of a business risk, you bring into the numbers, or you bring into the numbers increasing or falling and connect them with the business risk. So I think the synchronizations of numbers with narrative, or synchronization of numbers with your explanations, if possible, that would also signify a significant business risk in exam paper. So your explanation has to be very depthful. What is a depthful explanation of a business risk? Just let me write down here the points I'm discussing. Number 1, each business risk should be picked up from the scenario, should not be hypothetical. Hypothetical means your own imagination. You should pick something from the case, right? It should not be hypothetical, that is, you're assuming something. So each business risk should be picked up from the scenario. If for a business risk mentioned in the scenario, the management has already taken a corrective action, or mitigated it through proper policies, through proper actions, then this will not be a significant risk. At times, the examiner do tell you about a problem in the company, but later in the same paragraph, the examiner also tells you that the management has already rectified it. So if a student writes that particular risk, it will not be significant because already the management has reduced the magnitude of the risk by taking corrective actions. Just let me show you an example. If you look at this background information given to us in this exhibit number 2 of this exam paper. And just an example, again, these are webinars. I'm not going into depth, and these are, again, free webinars, right? So if you just look here in the para number 2, it says, as well as selling pet-related products for a wide variety of animals, the store also sells small animals such as rabbits and fish. So they are into the pet business, right? So they're even selling small animals like rabbits and fish. Staff members are fully trained to give advice to customer on methods including nutrition and journal animal health. And staff members are also trained in handling the types of animals which are stored. So a student can find, say, there are small animals and you cannot handle them well. They might get lost. They might get killed. You're not looking for the proper nutrition, and you will be happy that I'm getting 2 marks. No, examiner is saying the staff members are fully trained to handle the large pets, the small pets. They're very well trained for giving nutritional advice and looking after the animal health. So see, even though the storage of the small animals could be a problem, but examining team is telling us that that has been mitigated by the management by putting the staff training at an emphasizable area. So this will not be a significant risk. So because the magnitude has fallen down because of the corrective actions taken by management. You look at the next risk. Some stores sell more unusual pets such as spiders, snakes, reptiles, and require compliance with specific import restrictions and welfare standards. Now, after the full stop, examiner is not telling us about whether they have a legal compliance department or they have any department or manager who looks after compliance. This is a statement which is ambiguous. Now you can develop this into a compliance risk on a what-if basis. So the first statement where they were talking about the size of animals, they immediately talked about the training of the staff, and training of the staff is so good that they know how to store the big and small animals. So that point was mitigated. But for the compliance problem, they're not telling us about any mitigation. So you can pick this up as a risk. So this is just an example of how the magnitude can fall down in exam paper through a statement given by the examiner. Okay, so you go back to the briefing note. So each business risk should be picked up from the scenario, but if a business risk mentioned in the scenario, the management has already taken a corrective action, then this will not be a significant risk because it has lost its magnitude. Number 3, each business risk should be well developed, like 3 to 4 sentences long. I don't find a business risk like 1 and 2 sentences as very well developed. 3 to 4 sentences long is a well-developed risk. And finally, the impact on business objectives should be very clear. Mercurio is a listed company. So any business risk impacting profit or sales or market share or reputation will be more important for the shareholders, will be more important for shareholders. So in that way out, you can think about, oh, this is a significant risk because it's affecting something which is very important for the shareholders of the listed company, Mercurio. So first of all, it has to be case specific. Second of all, you're not picking up a risk for which a mitigation has already been given by examiner. Third, you're developing the risk well. And fourth, when you're talking about the impact of risk, the impact has to be on something which is more important to shareholders, because that will help you pick up this is a significant risk. Again, the business risk should not be prioritized. Examiner is saying evaluate the significant business risk. Examiner is not saying evaluate and prioritize the significant business risk. So you can do them in any order. You can talk about in whichever order you're getting the risk in the scenario. So suppose you find 6 risk in the scenario or 7 risk in the scenario, choose the 4 best one where you can write good, and choose the 4 best one which affects the profit, sales, and reputation, because automatically they will become significant. And you can write them in any order. You can write about sales first and profit after. So you can arrange them in any order because there is nothing about prioritization of business risk. So I hope you will learn from that. Just let's quickly look at the examiner criticism around business risk. So that can really help you formulate a very good answer for 2 marks. And then let's move to the third change in the AAA paper. Okay, if I go back to examiner feedback, business risk, December 22, examiner report. Okay, let's see what we can learn from here. In the AAA exam, significant risks are considered to be those which would have a significant impact, on client business. So here the client business was listed. So you are looking for impacts on, again, profit, sales, market repute, and where there is a significant probability of a risk occurring. We talked about that, a significant probability of risk occurring. So if we talk about small animals and any risk associated with small animal, that is not significant probability of occurring because they have a trained staff for it. So a risk and a mitigation, the probability goes down. But we were talking about a compliance risk because no mitigation was mentioned. So the probability of a non-compliance goes up. So you need to choose looking at the mitigations given in exam paper. If no mitigation is given, the probability rises and becomes significant. Mitigation given, probability goes down and lose significance. So try to read the case study very well, and you will easily judge the significant probability in the context of the information presented. Example given by the examiner from the question we are doing, Mercurio. Example, it is pleasing to see many candidates were able to focus on the risk arising, describing the impact on the business of Mercurio company. However, a much smaller proportion of candidates evaluated the significance of these risks by an assimilation of the information from different exhibits. For example, many candidates were able to identify the risk that the pet healthcare plan were a financial risk for the company, given in exhibit number 2, owing to the company's inability to raise prices due to customer price sensitivity and aimed rising cost. Stronger candidates then went on to assess that the risk in the context of both the likelihood of losses occurring and the magnitude of the revenue stream being a core service that consisted of 10% revenue. There was a risk in the scenario. Just let me show you that onto the safe side. If you go to the background information, and in the background information, you go to the para number 3. In the para number 3, it tells us Mercurio company operates the veterinary clinics within most of its stores. So they're running those animal clinics in most of the stores. These clinics are staffed by fully qualified vets, which is good, and who offer full range of these services. The customer can pay as they go for appointment and treatments of their animals, or can take out an annual pet healthcare plan, which offers the cost of an essential vaccination and quarterly health checkups. The pet healthcare plans are extremely popular. So this is a very popular plan among all the customers of Mercurio. Extremely popular. As they offer good value for money to customers. And the annual income from sales of these plans historically account for 10% of the revenue. So total contribution in your revenue from the animal healthcare or pet healthcare. So pet healthcare is a very important segment for your business. It's extremely popular and it's contributing 10% to your total revenue, which is very, very significant, right? Now, the problem here is that the cost associated with the vaccination and health checks of the animals have risen over recent years. However, Mercurio company has not been able to increase the prices due to customer price sensitivity. Now, this is the problem. You're not able to increase the prices even though the costs have increased. Now, this is a business risk. If you're not able to increase the prices, your future sales will be impacted. Your sales might not be growing at a pace at which they should grow, or there could be a pressure on your operating profit margins because the cost is rising, but you cannot increase the sales price. So see, you can develop this business risk. You can talk about that if the prices could not be increased and the cost keeps rising, it's pressurizing your operating profit margins, right? Or it's impacting your future revenue growth. And this is not something good for Mercurio being a listed company because you're not increasing the wealth of the shareholder at the end of the day. So you develop this point. And this is a very important segment. You cannot just close it down. It's contributing 10% to your income. So the management needs to do something about pricings. You're not giving any recommendations, but this is just a thought process. So you can develop the second, the 2 paragraphs you can see on the screen, that it's extremely popular, but the problem is the prices cannot increase, and that's where the risk comes in. So that was an example the examiner was giving us in the report as well. The same example was being taken here, talking about that the student picked the pet healthcare plan as a financial risk owing to the company's inability to raise prices. So because you cannot raise prices, it is a financial risk for you because it will be impacting your future sales and profits due to the customer price sensitivity. Stronger candidates went on to assess that the risk in the context of both the likelihood of losses to future revenue, considering it is contributing 10% to your revenue, being a core service that consisted of 10% of the revenue. So see, this is how you can develop your significant business risk because it was affecting your sales and affecting your operating profit margins for future. And this is an important segment contributing 10% to your total revenue. So it is important for the shareholder as well. So this is how you can develop it, right? Finally, in summary, candidates do not seem to have difficulty in identifying business risk and the implication on the company. However, the differentiator between a stronger student and a weaker student was their ability to evaluate the risk and their and demonstrate their professional skills of commercial acumen and skepticism. Students are good on picking business risk, right? But the difference between a stronger and the weaker student is how you explain it. Bringing the commercial acumen. The commercial acumen was your future sales could be lost because you cannot increase the prices, or your profit margins could be under pressure because you cannot increase the prices. So that's where the commercial acumen is coming in, and you need to be skeptical that this is a segment which is giving 10%, and if the prices are not increased, this 10% would significantly impact your revenue. So you need to bring your skeptical mindset. So it's about the point development, which can help you raise the bar and impress the examiner that you're writing a significant business risk, picking it up from the case, developing it well, and writing a clear impact on the business objectives. And that's exactly what I was telling you right here. In my briefing note, right? I was telling you that you should write it in a depth of like 3 to 4 sentences, because that would perhaps give you the right depth, or the adequate depth, which might impress the examiner at the end of the day. So these are business risks. I hope you can improve upon your writing around business risk and significant business risk. What are significant business risk? I hope you got some examples of that, and you would do the best here. Okay, moving back to the presentation then. The third change is the bigger one, where we need to prioritize and evaluate the significant audit risk. Now, two things coming here. Prioritize is number one, and significant is number two. We already talked about significant business risk, so probably understanding significant would be easier for you. But now over here, you have another step. It's not just to write the significant audit risk or ROM, but is to prioritize them. Now, what does prioritize means? Arranging them from most important to least important, or arranging them from the risk having the highest materiality, going down second highest materiality, third highest materiality, fourth highest materiality, arranging them, ranking them, prioritize them. So prioritize means to list them from highest to lowest and significant. So if you're writing 5 significant risks, you need to arrange them in order. That's where you're meeting the expectation of prioritization. Let's see, what is the success criteria of prioritization? What can you do best to impress your examiner that you did prioritize the audit risk? It's easier. Okay, we go to the case again. We have the risk of material misstatements. Now, we had 18 marks for risk of material misstatement minus the 3 marks we got for materiality. So you're left with 15 marks. 15 divided by 3, so we're writing 5 risk of material misstatements, right? Now, how would you do that? Now, for example, we have already decided that the materiality level for us is $3.6 million. So anything above 3.6 will be a significant risk, monetary, quantitatively, right? So for example, just to save my time, when you read the case, you found some quantitative, you found some risk with different monetary values, given. For example, you find a risk with a value of $6 million, another one with $4.5 million, another one with $4 million, and another one with $3.8 million. So suppose you found them, right? Now, when you were reading, you found these risks and you were copy pasting them on the briefing note, the first, the second, the third, the fourth. Now, when you copy pasted them in the reading and planning time, and now you need to write them down. So you can arrange them from the higher one to the lower one. All 4 are important. All four are significant because they're exceeding the threshold of materiality. So no doubt about them. All four are significant, but you need to prioritize them. So what I will do, I will say, I will choose the best one, $6 million first. So I will write my $6 million risk first. Then I will write the risk about $4.5 million, $4.5 million, which whatever it deals with, might be government grant, might be any accounting issue. Then there is another risk about $4 million. And then there is another risk of $3.8 million. Now, first of all, I have written them in the descending order from highest to lowest. All are significant because they're exceeding the threshold, but I've arranged them in the order of 6, 4.5, 4, 3.8. Now, for example, because I'm evaluating, so I'll give a conclusion. You have to give a conclusion, right, for the ROM in the middle of the briefing note, wherever you're writing the ROM requirement. So wherever you end the ROM requirement, you will give a conclusion. And you say, the risk of material misstatements, the significant risk of material misstatement, the significant risk of material misstatements above has been arranged in order of their quantitative significance, has been arranged in order of quantitative significance, which defines their priorities. So how would you tell examiner that what is my basis of prioritization? My basis of prioritization is that I've just arranged them in order from highest to lowest, and this concludes me. Secondly, if you are not arranging the risk in the order of priority 6, 4.5, 4, and 3.8, then you cannot give this conclusion, because this conclusion given here is just telling us that the risk above has been arranged in order of their quantitative significance, which defines their priorities. But suppose a student number 2, he is doing the risk in the order in which they're coming in the exam paper. For example, he first found a risk in the case, order of case. He first found a risk which is of $3.9 million. He write that. Then he found another risk of $6 million. He write that. Then he found another risk of $4 million. He write that. Then he found another risk of $3.8 million, and he write that. So in whichever order he was getting the risk, he was just writing it down. He was not worried about arranging them in the highest to lowest order. So he just write it down. Now, all are significant because all are exceeding the threshold of materiality, no doubt about that. Now, in the conclusion, you have to give a conclusion for the prioritization. So prioritization will come in the conclusion. You will say the significant, you will say the risk identified above you will say the risk number 2 and 4 are the most significant ones because they have the highest quantitative significance. They have the highest quantitative significance in terms of the overall risk identified during the risk assessment stage. And the auditor needs to be skeptical during audit to address these risks. Or you might say you can just simply say this, just removing this line. The risk number 2 and 4 are most significant because both the risk are subjective, as they involve estimates and management, as they involve estimates, which makes them more inherently riskier then other risks. So you can have a justification that to me, the 2 and 4 are the most important one, the most significant one. So you've prioritized them. You're saying 2 and 4 are the most prioritized risk. Why? Because they involve estimates, or because they have fair values, or because they have something special, which is not in 3.9 and 3.8. Even though 3.9 and 3.8 are material risk, they're risk of material misstatement, but they're not the important ones. Why are 2 and 4 important? Because they have some sort of an element like subjectivity, which makes them special. So either you arrange them and you put that arrangement in the conclusion paragraph that they have been arranged in order, or you write them in any way out, but then give conclusion that out of the list of 4 here, this and this is important and why. So this is how the prioritization would come in. So this is how you go down with the significant risk of material misstatement. Just let me show you the examiner comments here. It's pretty easier if you can do that. These are examiner comments for audit risk or ROM when the examiner asks you to prioritize them. An issue that repeatedly arises is candidates attempting to find 9 risks for an 18 marks question and conducting little or no in-depth analysis of them. This will not be sufficient to attain a pass marks. This means that some of the risk stated in the answer will be speculative. It's not 9 risk for an 18 marks answer. It is 18 minus 3 technical marks for materiality. You're left with 15. Each risk now is worth 3 marks. So technically, you're writing 5 audit risk or ROM, which are written in depth. Not just writing any risk which is hypothetical, speculative, finding the risk from the case study, and finding a risk which exceeds the materiality threshold of $3.6 million. Number 2, consistent with the September exam, it was disappointing to see that few candidates attempted any prioritization of the risk. So few candidates attempted prioritization, which is very, very bad. Professional marks were available on to the candidates who attempted the requirement to prioritize. Candidates were expected to identify the most significant risk. Now, most significant risk is easier because you have a threshold for materiality. So any risk above that is a significant one. So that's easier for you as a student. And then provide a brief justification for the choice. Again, credit was awarded for candidates who offered a reasonable explanation, and therefore a range of explanations are valid. So there could be a range of explanations you can give in a conclusion paragraph that what defines your most significant risk. Number 1, candidates should be aware that this marks is for act of justifying the reason. Candidates can obtain these marks by either ordering their answer in priority order. Have I given you that example? So either you can just arrange the risk in the priority order from 6 to 4 to 3.9 or 3.8, arranging them in order. Candidates can obtain these marks by either ordering their answer in priority order, easiest thing to be done in exam, and stating this is the case for summarizing in a brief conclusion. So you arrange them in the order and you give the same arrangement in the conclusion paragraph. So you summarize that my basis of prioritization is they have been arranged from highest to lowest in terms of the quantitative value. This is the most easiest thing you can do in exam. Arrange them in priorities and give that a conclusion. That's the first thing I've shown you today. The second, where candidates use the later method, if a candidate does not state which 1 or 2 risks are most significant, but simply list all of the identified risks, they will not take credit. If you choose the student 2 option, which I've shown you today, that you do them in any order, you write them in any order, but in a conclusion, you tell that risk number 2 and 4 are important and why. So now it's up to you. You want to be a student 1 or you want to be a student 2. You just want to arrange them in order and give that as a conclusion, or you want to do them haphazard. And in a conclusion, you tell 2 and 4 are important and why. But that why is important because see, this is what the examiner is telling us. If a candidate does not state which 1 or 2 of the risks are important, but simply list all of them, this will not take credit. So you will tell this and this risk is important out of the 5 I wrote and why. It's not writing all 5 of them, but any 2 of them and justifying why they are most significant. So either you go with this track, or the easiest track is just to arrange them in the order of the quantitative materiality and then put a summary conclusion that they have been arranged from highest to lowest. That's the easiest one to prioritize risk in exam paper. So please be assured of the marking scheme. It's 3 per risk, 3 technical marks for materiality. You need to identify the significant risk, which is one which exceeds the materiality threshold. You can do them in priority orders, you can arrange them in priority orders, or you can do haphazardly and then give a conclusion that what is the justification of the most significant risk you want to give in. So that is it, what you can do in. So I hope that addresses the requirement, prioritize and evaluate the significant audit risk. Again, these are webinars which are like free content, so we cannot go down much into depth, but at least it's giving you a holistic idea. Now I'll be doing the last of the change in another session, and that session would get connected with this one. So I just try to merge both the webinar videos together. It will still remain the day 3, and right after the break on day 3 of this webinar, I'll be looking after this one, different ways in which risk question requirement could be tested, which is in line with the examiner article attempting Section A question. So we're taking a break, and right after the break, we'll resume back discussing the final version of the day 3 webinar, is to look at the different ways in which risk requirement could be tested. Hello and assalamu alaikum, and welcome back right after the break. This is the day 3 of the AAA December 23 webinar. And just before the break, I was discussing with you a requirement where you need to prioritize and evaluate significant audit risk, or ROM, and what are examiner expectation. I did specified from the examiner report what you need to do for prioritization. There are 2 ways to prioritize. Either you arrange the risk in terms of quantitative materiality from high to low, and this is what you are giving in the conclusion as the basis of your prioritization. Or you can do the risk answer, audit risk or ROM answer in any sequence, but in the end, in conclusion, you need to identify 2 of the most significant risk from the list above and justify why these 2 have been picked as most important risk. And there could be multiple justifications. It could be because it involves any estimates, or it could be because it involves some risk of management bias, or there could be any other reason, or it could be something new during the year, like a new acquisition taking place during the year. Any possible reason why you picked those 2 particular risks out of the list of like 5 and 6 above, which you believe were the most significant. So there are 2 ways to give conclusions. Whichever way you like, more comfortable in exam, you can follow that, either the way 1 or the way 2, which I was guiding you before the break. Now, just one last thing before we move on to the last part of our discussion. I was discussing with you on the practice platform the conclusions and the different ways you can conclude on the priorities of risk. You know the materiality level. You have already set the materiality level, so you know which of them are significant in terms of your materiality, but there could be other indicators why you're concluding on significance. It could be many other reasons, which I just mentioned shortly. What if you come across in an audit risk question a new audit client? And we know a new audit client in an audit risk question is a detection risk, or you come across a scenario where you have a control risk, or you come across a scenario where you have a risk of management bias. And these such risks normally don't have numbers associated with them, like quantitative numbers, like detection risk or control risk or any particular risk of management bias. How would you arrange them? For example, if you're going with the first one, which is you're arranging risk in the quantitative order, 6 million, 4.5 million, 4 million, and 3.8 million, you're going in the quantitative order, descending them down from high to low, then in that situation, you can put detection risk and control risk after the quantitative scenarios have ended. And suppose you need to write 6 risks, 4 of them are quantitative, 1 is detection risk and 1 is control risk. So you can bring them down if you're going with that subject from high to low. But if you're doing the second one, where you are just writing the risk in any order, and then in conclusion, you are justifying which 2 of them are more important and why, then in that case, if you're doing a question on audit risk, not ROM, then you can put detection risk at the start, or you can put the risk of management bias at the start if there is any particular risk of management bias in the scenario which is extracted from the scenario. So risk of management bias or detection risk can come up before you start writing the other risk. And then when you're giving a conclusion, where you have a detection risk in an audit risk question, then you can conclude that detection risk is also one of a significant risk out of the two you have chosen, because detection risk is something which affects the overall audit and which affects the overall failure of the audit. So that is a very important risk that the auditor needs to be very alert of. So if a detection risk is available in an audit risk question, it is most likely to be a significant risk out of the two you are concluding in the conclusion. So I hope you're clear with that. You can just watch the recording on a slow pace and just understand how you're fitting detection risk and control risk in situation 1 and 2. Okay, now I'm moving towards the last example for which I need to change the paper. The paper in which that example came in was the March June 23 paper, the latest one. So I just need to open that March June 23 paper in front of your screen now. And we came across a requirement in the partner email where we need to focus the last part of the lecture. This is a change, and the change is the different ways in which a risk question or requirement could be tested. One of the way is to evaluate, is to prioritize and evaluate the significant audit risk or ROM. That is quite a typical way the question is set in, and that is the way you will also see in the December 23 exams and onwards. But there could be a second part of the question, like a B part or a C part, where something more is asked for, a particular significant risk. And these changes have come in terms of the examining team article attempting section A question, which is under syllabus area D. I did recommended this article on the day 1 of the webinar even. So please read through this article. The examining team has given different ways in which a possible risk question could be set in. The more popular one is the one we have already done in the session. Now, this change of requirement was reflected in the June 23 paper. So at least you have an example of that, and you can foresee this requirement coming up in December 23 exams onwards even. So you should be better prepared of, because it's already tested. So I just want to show you that requirement which came in the June 23 exam and what are examiner expectations around it. If you go to the practice platform back again and you look at the June 23 paper, a more recent one on the practice platform, and you look at the partner email, and in the partner email, you look at the requirements. The first requirement, A, is very typical. That is to evaluate and prioritize the significant risk of material misstatement. So you are very familiar with how to go down with prioritizing. I just explained that, and how to go down with significance in terms of either materiality, or you go in any order. And then in the conclusion, you mentioned that what are the two most significant risks and why. In the first requirement, where you need to evaluate and prioritize the significant ROM, examiner is saying you are not required to consider the risk of material misstatement relating to inventory at this point, as this is dealt in the part B below. So examiner is saying that when you're identifying the significant ROM, don't identify inventory as a significant ROM, because you need to deal with it in the B part of the requirement. So for the 18 marks requirement, you know what to do with 18 marks. From 18 marks, you will take away 3 marks for materiality. So you will be left with 15. For 15, you need to write 5 risk of material misstatement with each worth 3 marks. Then you come to the B requirement. Examiner has mentioned not to focus on inventory in the A part, because you need to deal with that in the B part. In the B part, examiner says using exhibit 3 and 4. So examiner is saying using 3 and 4, not 1 and 2, just 3 and 4. So that means the answer lies within 3 and 4. Number 1, justify why inventory has been identified as a significant risk of material misstatement. Why is inventory identified as a significant risk of material misstatement? What are bases? Now, this is exactly, if you give a conclusion in the answer A above, you will conclude inventory has been identified as a significant risk and why. Now, that is what exactly the examiner is asking for in a separate requirement, that why is inventory a significant risk? What is the justification? Yes, one of the justification could be that it is material. It is above the materiality threshold and you get 1 mark. But you need to give more bases, which will come out of the case study, Exhibit 3 and Exhibit 4. Now, so your focus has to be on justify why inventory is identified as significant. So the focus is on justify why. So every justification will give you 1 mark. Why inventory has been identified as a significant risk. So if you give 5 justifications, you get 5 marks. It's a total 14 marks question. So suppose if you give 5 justifications, you get 5 marks. So 5 will be deducted from 14. You will be left with 9, for example. Then you need to design audit procedures, which should be included in the audit plan to address those risks. So whatever risk you have identified in inventory, what procedures will you make on those particular risks? So these are not journal inventory procedures. These are around risk in inventory mentioned in Exhibit 3 and 4. So around inventory, there will be some issues in Exhibit 3 and 4. You need to make procedures around that for the remainder marks. So if you're left with 9 marks or 8 marks, you will make 8 or 9 procedures. Let's see how will you tackle this question using Exhibit 3 and 4. Again, this is just a free webinar, so I'll just give you a hint, just give you an outline, and we'll end things up with. So let's go back to my Word file where I was discussing this on the day 2. That is right in front of your screen. This is basically the examiner criticism. Justify why inventory has been identified as a significant risk of material misstatement. Just before that criticism of the examiner, I just want to tell you how would you be attempting this question. So I'm just taking this question from my day 2. I copied this question on the day 2 right here. And we just go down, bring it down on the day 3. We'll just try to attempt this question a bit so you get an idea, and then we'll look at the examiner criticism. What is the examiner criticism around the question? What went wrong with students in the exam paper? So just let me put this question over here. So this is the question from the June 23 paper, which we are trying to attempt in. Okay. Using Exhibit 3 and 4, justify why inventory has been identified as a significant risk. Let's see what can be an ideal pointers for that. You need to explain them. I'm just giving you pointers just to make your thought process open, and then you go down making a proper explanation of each point. And then you need to give procedures for inventory specifically. Okay, let's go back to the scenario. Okay, in this question, you need to set materiality on revenue. It is written here. When determining materiality, please use revenue as your basis. So over here, we need to use materiality as our revenue. And it is mentioned here that it is a new audit line. So if it's a new audit line, so we'll use the lowest level of materiality. So materiality, and it's a new audit line. That is what we need to focus on. So I'll open up the briefing note. And in the briefing note, we'll write to from subject date. I've just demonstrated that. Then an introduction. After the introduction, you go down writing the materiality paragraph. See how I have formulated the materiality paragraph. The materiality is based on revenue as concluded by the partner. The range of materiality on revenue is 0.5 to 1%. Revenue of the company, that the revenue of the company is given right in the extracts of the financial statement. I think it's in the background information, I guess. No, it's in the notes of the meeting. In the notes of the meeting, you have been given the revenue of the company, right? The revenue of the company is $4.9 million. That's given on the Exhibit 3. So revenue of the company is projected at $4.9 million. Materiality at the range of 0.5% to 1% will be $24,500 to $49,000. That's from 0 to 5. As Encore is a new audit client, the audit team will have less knowledge of the business. Therefore, the overall risk profile for a new client is considered higher by the audit team, thus keeping the materiality level at 24,500, which is the lowest one. So on revenue, we either have 0.5 or 1. So it's a new client. So I'll keep it at 0.5 because I have less knowledge of the business. This is exactly the paragraph I drafted with you in the previous question, and you get 3 marks. Now you need to do the ROM part, which we are not attempting. In the ROM part, you need not to focus on inventory. Then you go down with the significant, why inventory is identified as significant risk. That is the part I am doing with you, right? So I'm just removing this from here. All things. So just I can fill in the answer with you, right? Why inventory is a significant risk from Exhibit 3 and 4. So just let's open the Exhibit 3. In Exhibit 3, the only thing for which the examiner wants us to refer the exhibit number 3 is perhaps for the financial information. So we know what is the materiality. So from the Exhibit 3, we get to know that revenue is 4.9 million, and we've already calculated materiality, which is $24,500. So if inventory is above $24,500, it is material. Let's see inventory in note number 4, exhibit number 4. Now, when you look at the inventory in note number 4, the total of inventory is $637,000 for the current year. And last year, it was $544,000. So it has increased a lot if you look at the total. So total inventory is $637,000, and it comprises of raw material, work in progress, and finished goods. Each one of them has specific issues, which we will address shortly. But overall inventory, $637,000 is material, right? Because our materiality level is 24,500. So it's quite a significant balance considering our materiality is just 24,500. So that's the first reason why inventory is identified as a significant risk. Reason number one, inventory at the year end 20x5 is $637,500, which is significantly higher than the materiality threshold, of $24,500 as set above on revenue basis. So first of all, why inventory is a significant risk? Because first of all, it's significant because it's significantly higher than the materiality threshold of 24,500. So 637 is the number for revenue. Sorry, is for inventory. So that's one basis. So you explain it properly and you get 1 mark. I'm just putting the bullets right. Next reason why inventory is a significant risk. Now, within the inventory, you have note number 1, note number 2, note number 3. So these can become 3 specific reasons why inventory is a significant risk. Look at the raw material inventory first. Note number 1, raw material inventory has increased from 16,000 to 24,000. There is a significant surge in raw material inventory. That is one issue. If you look at raw material inventory, almost raw material inventory has increased by 50% over the last year. So that is one reason. Any unusual fluctuation, any unusual increase from the last year do make something very specific for the auditor in terms of the risky area. For raw material inventory, it has increased by 50% over the last year. This is a significant fluctuation. This is a significant fluctuation. And this is a significant fluctuation, and this needs to be investigated for any possible overstatements. So because the raw material inventory has increased a lot, auditor will investigate it for any possible overstatement because it has increased by 50% over the last year is another reason why inventory is a significant risk of material misstatement. You go back to note number 1. The reason for increase is given. The company tries to minimize the amount of raw material stored at the premises, but to take advantage of the discount offered on bulk purchase from supplier, a large quantity of aluminum was purchased in June 20x5. So just to get benefit of the discount, you purchased a large quantity of aluminum in June 20x5, which is the year end of the company. So just at the year end, you purchased bulk raw material. Now, auditor needs to be skeptical. He needs to verify he needs to review the discount policy. He needs to ensure the purchases are legitimate. There is no fake element with the purchases, and you need to ensure that you did that the discount being offered was very attractive, and that resulted in bulk purchasing. So you need to gather evidence around that. Okay, number 2 is work in progress. Now, just to cut short my webinar, you can read this out from here. there are lots of issues in work in progress. The last line itself says, the finance director estimates the percentage completion of each contract. So the finance director estimates the percentage completion of each contract at the year end. And that is what makes work in progress as a very significant risk of material misstatement, because anywhere we have estimates, it automatically becomes risky. And that too, an estimate of a director, there is a significant increase of management bias. So why is work in progress a significant risk of material misstatement in inventory? Because the company's finance director estimates the percentage completion, and that estimate is making it risky. So anything estimated becomes risky. So that is another reason why work in progress is a significant risk of material misstatement, because estimates are involved and there could be a possibility of risk of management bias. So in every component of inventory, we have something special. Raw material has increased a lot. In work in progress, there are estimates. Overall inventory balance is very material. And if you look at the threshold of materiality, 24,500 and so on and so forth. One more thing. If you look at work in progress, you have to include the raw material cost. You have to include the material cost, the labor cost, and the overhead. So in the work in progress, when you look at the labor cost, which is right over here, raw material relevant to each contract are input. Payroll cost are input manually using the timesheets. Payroll cost is input using the timesheets. Now, if you read the case properly, there is an issue with the payroll cost in the scenario. And if you go back to the exhibit number 3 and you look at the payroll, there are some deficiencies in the payroll timesheets already identified in the scenario. So if there is a control risk in the payroll, if there is a control risk in how the payroll is recorded, that will eventually affect the payroll taken as part of the work in progress. So there is an extended risk in work in progress because there is already a problem mentioned in payroll in the exhibit number 3. And that problem of payroll will be carried forward when you look at the work in progress. And in the work in progress, it says payroll costs are input manually. And there is already a problem with payroll cost in exhibit number 3, that the controls around payroll recordings are weak. So that is also one reason why inventory would be considered as a significant risk, because there is an element of a control risk associated with inventory, plus control risk associated with payroll cost. So control risk associated with payroll cost in the exhibit number 3 will also make this a significant risk of material misstatement, because that control risk associated with payroll cost, you need to understand that payroll is a component of work in progress valuation. So there is a risk that work in progress could be wrongly valued. And then you go down to the finished goods. Finished goods have increased a lot, almost like 50% over the last year. So that's one of another reason why you need to consider finished goods as important. There could be a risk of overstatement in finished goods because they've raised a lot. And then there is a note number for finished goods. Currently, one boat which has received the license to sale is being stored at the company's premises, as the customer cannot take delivery until October 20X5. So one boat is stored even though you got the license, but the customer cannot take the delivery. A second boat is awaiting safety inspection, having failed the first inspection due to fault safety equipment being installed. So there are 2 boats in the finished goods, each one of them having problem. The first boat has already received a license, but the customer cannot take a delivery, so you're holding it. Now, when you look at the accounting policy for company in exhibit number 2 of this case study, it says that when the board receives the license, the revenue should immediately be recognized because the performance obligation is met. That's, I think, somewhere in exhibit 2. So because this board has received the license and the customer cannot take the delivery, so you cannot include this in your inventory. You need to de-recognize this from inventory and recognize the revenue, because the condition, the performance obligation has been met. So this is no more part of your inventory. This should be considered as a sale because your performance obligation has been met. So I think the inventory is overstated because this boat is part of your finished goods of $80,000. It should not be part of the finished goods because already the performance obligation is met, and it should not be recognized as an inventory, rather revenue. A second board is having some issues with valuation because you're having some issues with the second board due to some faulty safety equipment. So probably you need to look at the valuation, how it will be valued at the lower of cost or NRV, or any additional cost which needs to incur to bring the boat to a condition where it will be fit for license. So any additional cost, and how would that additional cost affect the lower of cost or NRV? So there are two possible reasons in finished goods. I think one is the boat number one having an issue that it should not be part of the inventory. Inventory will be overstated. And with the boat number two, you need to incur some additional cost to make it fit for the license, and how that additional cost will be accounted for in inventory valuation. So there are possible issues within inventory. First, the whole inventory balance is very significant. Then there is a significant rise in raw material inventory because of the bulk purchase. Then in the work in progress, there are estimates. In work in progress, there is issue with the payroll cost. In the finished good, there is an issue with the boat number one and the boat number two. So for those multiple reasons, inventory is a significant risk of material misstatement. And how many points we have? Almost like 6 bullets, which you will translate into a proper answer. So 6 marks will be taken when you justify why inventory is a significant risk. Now you have a total of 14 marks for this requirement. So 16 will, from 14 marks, 6 will go away. So that means when you're writing the procedures, you need to write 8 procedures. So 14 minus 8 is equal to, 14 minus 6 is equal to 8. You're left with 8 marks, so you need to write 8 procedures. Now procedures have to come from scenario. You open up the first one, raw material. It tells the company tries to minimize the amount of raw material stored in premises, but to take advantage of the discount offered on bulk purchase from the supplier. So can we review the supplier contract to confirm how much was the discount, how lucrative was the discount, which was being offered by the supplier? So can we just confirm the discount? So that is a case-specific procedure. So a large quantity of aluminum was purchased. Can we just review the inventory count sheets to confirm how significant large quantity was purchased? Can we just check the purchase order relevant to this large bulk purchasing to see that there was the purchase was indeed taken at a bulk discount, or we can see the purchase invoice for a bulk discount offered. So a lot of things can go around that particular statement in the raw material. For work in progress, we can recalculate the work in progress. We can take some sort of a representation from the management on the stage of completion, because that's quite a risky area. For finished goods, one boat which got the license but still recorded in inventory, we can discuss with management the reason why this is still being recorded as inventory, even though the performance obligation is met, or asking the management to de-recognize the boat from the inventory, so on and so forth. You need to find procedures from within the sentences given over here. You need to dig these sentences here, and you need to find procedures from within the facts. I hope you remember my mnemonic for procedures, CASP, case-specific, action, source, purpose. So procedures will come from within the paragraph here, right? Raw material, work in progress, finished goods. You dig inside them, you find the facts, you convert them to a procedure. So you need to find good 8 procedures from right over here. You're not writing journal procedures on inventory. You're writing specific procedures around the risky areas mentioned in note number 1, 2, and 3. So this is one sort of a requirement which can come in your future exams as well, where the examiner might ask you justify why a certain account balance has been considered as a significant ROM. So you need to go into the case to find the justification. One simple justification could be that it is above the materiality threshold, and rest of the justification should come out of the case study. And then you need to write the procedures, which has to be case-specific procedures on a given account balance, not journal procedures which you have rote learn on inventory. So I hope you will understand this requirement. You will read the examiner article attempting Section A question, and you will be better off how would you go about looking into this requirement. So I hope you must have taken some idea of attempting this requirement and the other things we have discussed on the day 3 of the webinar. We discussed prioritize and evaluate significant audit risk and ROM. We discussed the significant business risk and examiner expectation. And we also discussed about the materiality determination and how you can fetch 3 technical marks around that. We also understood the structure of the briefing note, where to put the materiality paragraph, how to put a conclusion on significant risk of material misstatement. Conclusion will come right after the requirement of significant risk of material misstatement or audit risk. So that could ideally be somewhere in the middle of the briefing note. So these are fundamental changes since September 22. I hope you're familiar with that. I hope these free webinars will give you just an outline, and at least you can practice more around this, or at least you can build up your concepts around this by reading the examiner articles. So instead of being unaware, at least these webinars will make you aware of it. So something is better than nothing. So at least you get the track, and you can then accumulate your practice around this track to be successful. So I hope you thoroughly enjoyed the day 3 of this December 23 webinars around the changes. And over the day 4 and day 5, I'll just be brushing over the marking schemes and the changes. And then on the day 5, the professional marks and how significant they are for your success in the AAA paper. I hope you thoroughly enjoyed them. I wish you success. Take care. Goodbye and Allah Hafiz.